It is with great sadness in my heart to announce that my friend and trading mentor, not just to me, but mentor to tens of thousands, if not hundreds of thousands of people all over the world, Dr. David Paul, has passed away. David Paul was one of a kind. In the video that I'm about to share with you, David will take you through the psychology of trading like you have rarely heard it before. This was recorded during the London Price Action Symposium in 2022. And my colleagues and I have decided that we want to make David's lessons available for the world to consume and for the world to share. I have an enormous amount of fond memories of David Paul. Here's a couple of black and white stills from a seminar that we did together with Larry Pesavento, who is sitting, and David Paul to the left next to me. David was one of those characters that you don't see coming. He was always humble, but when he stood up and he started talking, it was that of a Presbyterian Sunday reverend. He could raise the roof, and when he spoke, people paid attention. Such was his power, and such was his conviction to his topic, a profession that he had embraced for 40 years of his life. He was a true trader in every sense of the word, cunning when he needed to be, decisive when he needed to be, brave and bold when he needed to be, and yet humble in taking losses when he needed to do that as well. And this is the hard bit. David, I'll miss you. You were a fantastic friend. You were a great trader. I witnessed that when we shared a house together in London. You really knew when to press a winning position, and I will forever treasure the advice that you gave me when you said that when you win, make sure you win big, press your winners. And that's what I will take with me, amongst many other fantastic memories that we shared over our nearly 20 years of friendship. Rest in peace, my friend.
Over the years, I was fortunate enough to, on many occasions, present at trading events and conferences alongside David. And for those of you like me who were ever lucky enough to hear him deliver a presentation, there's probably a few things that are going to stick in your mind. So from my side, the things that I always took away from any presentation he delivered was he was a person who, obviously, one of those unique person who really loved and lived what he did. He was obviously, amazingly knowledgeable, had high levels of expertise in all things trading and markets. And David and I had a shared passion, I guess, for trading psychology. But one of the things that I will always remember about him, and I'm sure many of you will be the same, was a very unique humour that he brought to his presentations and a way of delivering his messages in very memorable ways. And a man obviously deeply intelligent and with a real sharp wit, which will be a key part of David that will live with me forever. And I think David, while he's no longer with us, he is a person who's been involved in the markets for a long time, and I think he's going to leave a legacy in his teachings and in his work which people will still be able to access. And many people have been fortunate to have benefited from David's teachings while he's been with us, and I hope that he will be pleased with the legacy that he's left all of us in the teachings and in his work, which people can continue to learn from going forward.
Well, good afternoon, everyone. I hope you had a good lunch. I don't know whether I'm supposed to start or not, but I think I better. It's getting late. Who wasn't here on Friday afternoon? Anybody Oh, quite a few people who weren't here on Friday afternoon. Okay. Well, I feel a bit like the comedian who comes on after the dancing girls, after the presentations that we've had over the last few days. They've just been great, information heavy. This all started for me about 40 years ago when I went off to South Africa to play rugby. And I was billeted into an office outside Johannesburg at De Beers Research Laboratories. And I was billeted into this office with an old fellow who started off life in Cornwall, but had been in Africa a long time. He's long since dead. And every day he had a routine where he would go to the corner of the office where the engineering drawings were hanging in a big filing cabinet, A0, I believe, is the... He would take the drawing, he would put it on his drawing board, he would line it up with a set square and masking tape, and out of the Rand Daily Mail, he would update the high of the day, the low of the day, the close, and the volume traded. And every day he would update about 50 charts that he was following on the Johannesburg Stock Exchange. And he was making money by trading basic chart patterns, and he had a tattered copy of the Bible of that era. It was called Technical Analysis of Stock Trends by two fellows called Edwards and McGee, and Andrew had a copy of it the other day. I watched him, and I saved up some money, and between April 1981 and October 1982, I saved up some cash and I put on my first trade. It was a trade in South African breweries, now called InBev, and it was a winning trade. And they say if your father takes you fishing and you catch a fish the first morning, will you fish for the rest of your life? So that's exactly what happened to me. I traded on my own until 1988. And in 1988, I had a bigger Mercedes-Benz than the head of De Beers Research and Development, and that seriously pissed him off. So there is a gold stock. It's not called Sibanye, but before it was called Sibanye, one of its companies that it bought out was a mining company called Randfontein Estates. And in an era before intraday trading, I jobbed Randfontein Estates and another company called Harmony Gold Mine, up and down, in and out. And I paid off my first horse on that, brand new racehorse from Harmony Gold Mine in about 1985. And that seriously upset the wife because the next year I paid off my house because she was upset that I spent the money on the horse rather than paying off the house. So, I left De Beers in 1988, traded on my own. I had an interest in an engineering company as well, and I sold the engineering company to Smith Mining of Texas, I think in 1992. And I did my first seminar on the stock market by pure accident in 1988, and it went so well that the Technical Analysis Society of Southern Africa asked me to do a seminar, one-day seminar at the University of Stellenbosch in Cape Town, and I did my first seminar in an auditorium just like this in 1989. Done an awful lot of institutional trading over the years, an awful lot of institutional training over the years, and I've trained all of the big banks of the world, especially in Africa, especially in Southeast Asia. I think it was because Standard Chartered couldn't get anybody else to go to Africa, so they sent me. It was great. And they couldn't get anybody else to go to Pakistan, so they sent me. But they told me I had to change my name from David to William because David sounded too Jewish. So they reckoned that wouldn't be a good idea in Pakistan. And I mean, that was a great period, folks. I met Tom in about 2005. We ran Which Way Today together. And then I tripped over Vector Vest, which I now promote in the UK. started with VectorVest, opened it in South Africa. We went from nothing to quite a big company relatively quickly. And VectorVest in the UK. At one stage, VectorVest in South Africa was 5 times the size of VectorVest in the UK. That should not be the case. It's a very small community, South Africa, in terms of people who are investors. And I came back to the UK where I was born. And I've built up VectorVest UK as a retirement business for me into quite a big company these days. I'll talk a little bit about that later on in the afternoon. In terms of academic background, I've got a degree in engineering. I've got an MSc in metallurgy and a PhD in applied mathematics. Those of you that any engineers here? Well, you'll know that the backbone of engineering at university is a subset of mathematics called calculus. Yeah? Well, calculus sort of came to me without any worries whatsoever. I could just do it in my sleep. And I had no great academic leaning, but my PhD gave me enough time to play rugby, and that's all I was interested in at that stage. All of that academic stuff doesn't help you greatly in taking money out of markets. And the thing that I've done that's helped me most in taking money out of markets is that in my youth, I was an officer in the greatest organization the world has ever seen, the Royal Marines. That's given me a level of confidence and discipline that I have drawn on for a very long time. And 45 years later, I can still fit into the uniform. Okay, 66, unfortunately, but anybody that feels like having a go, we can have a go. I don't care who you are. Okay, so that's me, folks. There was an awful lot of questions this morning about different types of trading, folks. And it's just my conclusion, after 40 years at this, is that we don't really trade any markets at all. We trade our beliefs about markets. And everybody's beliefs about markets are slightly and sometimes markedly different. And you've only got to read Jack Swiggart's book, where there's dozens and dozens and dozens of winning traders who have made a heap of money, and they all have got completely different beliefs about markets. So your objective is to find something that suits you out of these 3 days. Develop that process, something that suits your belief system about markets. And then do your best to refine the process, as Steve talked about yesterday, and then to try and size that, to scale that. So out of all of this, you've got an awful lot of work to do personally to find something that suits you. And unfortunately, it is a rite of passage to put that into place. And nobody can do it for you. It's like me doing your press-ups. You've got to do your own damn press-ups. Am I correct? Okay, there's no going around it. Okay, Larry has been a great mentor to me over the years. As I told the people on Friday, I bought his first book. And I've still got it, Larry. I've still got it, sir. And I use a variation of the AB = CD technique every single day. However, it is my own variation, slightly different from what Larry uses. And quite honestly, 2 people arguing over their methodology is like 2 ticks arguing over the spot on the horse just below its tail. You okay? The objective is to learn how to play the game, to have the resilience to go through the inevitable bouts of drawdown, which are going to come as sure as the sun rises tomorrow morning, and to have the testicular fortitude to get through that. Clearly, a bit of position sizing will help. Okay, and those of you that are new, there's a great paradox in position sizing. In other words, you're sitting here today, it seems obvious, risk 1% of your account in any one trade. But I assure you, the young fellow in the blue there, you're going to do your research tomorrow, and you're going to say to yourself, well, it's definitely going to go up. I've done all my work. Larry says it's going to go up. It must go up. So You say to yourself at a very deep level, well, if it's going to go up, let's have a big punt.
You give me too much credit. Not that far.
Let's have a big punt. Let's accelerate the rate of wealth accumulation. So you end up having a big punt. I speak about this. I do a webcast to VectorVest subscribers every Monday afternoon and videos during the course of the week. And boring old conservative me always talks about risk. Risk, risk, risk. Christian, am I correct there? Risk, risk, risk.
You certainly do.
And sometimes I'm boring about it, I know, especially when markets are raging up. But we have one guy, one of my favorite stocks is a platinum mine. It's just outside Rustenburg. I know the mine well. I know the people well. I could saddle up my horse and I could ride there. If it does what it says it's going to do, by the end of this year, 80% of its share price will be in cash in the bank. It's on a price to earnings ratio of 5. But anybody that's been at this for a while, you know that anything can happen. Okay, it's Africa. Eskom doesn't give them electricity. Some Egypt drops a wheelbarrow down the shaft. It's stuffed. One wheelbarrow down that shaft. Okay? So anything could happen. What did he do? He put his whole ISA, 600,000 pounds into the one stock, after me rabbiting on every Monday afternoon about risk. So there's a great paradox in position sizing. So let me not rabbit on. I've got an awful lot of material to cover, and I don't want to have to rush it. Those are the 4 core values of the Royal Marines. Yes, unselfishness, determination, courage, and number 4, quite important, cheerfulness in adversity. Now, yesterday afternoon, Tom asked Steve the major beliefs that a successful and consistently winning trader has to have. Tom, that's my answer to your question yesterday of the 3 core beliefs. First belief, money can be made in markets. Do you all believe that? Yes. Well, there's a whole industry out there saying that you can't. It's called the asset management business. They're saying, we want your money. Okay? I frequently get brokers coming to us at VectorVest. They want to recommend me, for me to recommend them clients, and they'll give us a backhander. And they say, well, they're looking for clients who try it themselves, screw up, and then they'll move in and take their money. That's what they want. So there's a whole industry out there trying to tell you that you can't make money in markets. The second thing is I can make money in markets. And that's going to take a bit of work, because the market will do its damnedest to prove to you every other day that you can't. And then I deserve to make money in markets. And I can help you with that, but I think maybe your mother would be better. Go and have a chat to her. And maybe you've been harshly toilet trained. I don't know, okay? But the whole concept of self-esteem is really, really, really important. And if you nip into Waterstones down the corner here, they have a whole row of books on self-esteem. And I can't imagine they're philanthropists. They're there because lots of people are buying them. So that's my best shot at that question that Tom sent to Steve yesterday. So what do I do? Well, I trade intraday. These days, mostly the S&P 500. I used to trade intraday Forex, and I haven't given up Forex, but I decided that when I'm speaking to VectorVest clients that trades in the S&P 500 are in sync with the stock market, and that just makes a great deal of sense. Okay, so I swing trades lasting 2 to 10 days, stocks, Forex, and futures. Core trades in stocks lasting 2 to 6 months. I manage a portfolio for the VectorVest subscribers, and every trade that I do is on there, and they see it, warts and all. Pretty much the same as Tom does in his Telegram group in a different time frame. And then lastly, a pension stock portfolio focusing on yield. At dinner last night, we discussed having enough money in your account to retire, to trade. And from the outset, when I started, I put money from my speculative account into a long-term account focused on yield. It took me about 7 or 8 years in South Africa to become financially independent. In other words, if I didn't trade, I would have enough yield coming in to actually cover all my expenses. And when I came back to the UK, I started the same thing. So I put, every year, I put about 50% of what I make into a long-term account. And I have stocks now that are paying me 15% dividend yield. And I've only owned them 2 or 3 years. And that's what VectorVest is really, really good at. So that's what I do. And as I say, you need some form of process. And then you need to develop the discipline to follow that process through thick and thin. And this is what Mike Tyson has to say about that. Everybody's got a plan until they get a smack in the mouth. And unfortunately, folks, unfortunately, and this is my experience over many years, that after 1 or 2 bad trades, everybody changes. Recency bias, and you actually curve fit to what worked well yesterday. So it takes, I'll always say, we've got to follow a simple set of rules through thick and thin. It takes a great deal of effort to follow those simple set of rules through thick and thin. A great deal of effort. And I hope that the live trading that Larry and Tom did on Friday will help with that. I'm going to try and talk about how to build that discipline a little bit later on. This is one of the greatest bits out of a movie that I've seen ever. This is $1 Million Baby. Do you remember Hilary Swank and $1 Million Baby? Clint Eastwood movie. She got an Oscar for it, or he got an Oscar for it. Very motivating fellow, old Clint Eastwood. At 92, he's in fact producing his life's best work. When he was a youngster, the movies he made were rubbish, absolute rubbish. But the movies he's made over the last few years have been quite magnificent, in my humble opinion. So Hilary Swank is working the old jobbing bag, and he didn't want a woman in his gym. And he got that wonderful Clint Eastwood stare. You know that stare? And he said to her, "Are you working the bag, or is the bag working you?" I'll never forget. I say that to myself. That's the first thing I say every morning when I go near that trading screen. Okay, are you working the bag, or is the bag working you? In other words, are you reacting, or are you sitting and preparing and waiting and patiently waiting for your setup to turn up? Helps me a lot, that. As I say, we're all quite different. And Dr. Brooks spoke about this, a methodology. And the most important thing about that methodology is that it has to I think the first person who put this on paper was a fellow who died recently called Van Thorpe, who I knew reasonably well. And he said, he called the whole concept of an edge expectancy. And in simple language, you've got to make more when you're right than you lose when you're wrong. And there's 3 things that contribute to that expectancy. One is the hit rate, the number of times out of 10, let's say, that you get this right. 2 is the risk to reward. Yeah, reward to risk. And 3 is spreads and commissions. And based on those 3, you can work out how much money you're going to make. So as Dr. Brooks pointed out, it's just not the number of times that you get this right. It's this mixture of these 3 things. And to quote Marty Zwig, he said so beautifully that I educated 2 children out of the stock market. Unfortunately, they were the broker's children. So those expenses and those spreads mount up, especially if you're a short-term trader. So there's 3 things you need to account in the expectancy. And most people, in fact, at a mental level, only think about the number that they get right. And don't think about the risk to reward, don't think about the spreads and the commissions. Okay. We need to manage our money very well, and I'm going to make a case for adding to winning positions. And clearly we've got to manage ourselves very well. And clearly Steve handled a great deal of that much more professionally than I can do it. But I'm going to give you my own thoughts on that. So let's say we've got a trading system. Are there any trend followers here? Simple, old-fashioned trend followers. Buy a 21-day high, buy a 55-day high. Well, it works, because if you're the fella who owns Boston Red Sox and the same fella owns Liverpool Football Club, John Henry, he made his money as a trend follower. And there's a little book called The Little Book of Trend Following. I think it was written by Michael Covell. And he puts together 20 or 30 guys who've made a fortune just simple trend following. Well, the hit rate that they have, folks, is less than 50%. In fact, about 38% of the time they're correct. The rest of the time they get bounced around. But it's a very profitable system, because you can make lots more when you're right than you lose when you're wrong. Emotionally very, very difficult. Swing traders can get it right. Let's say 60% of the time, as Dr. Brooks said a while back. And I think that if you're in the stock market and you play a strong edge, you can certainly get it right, I think, about 70% of the time. And in the stock market, I follow a methodology broadly similar to what two of the market wizards use. Bill O'Neill. Do you know Bill O'Neill, Larry?
Yeah, quite well.
I know him very well, yes. He had a birthday the other day. I sent him a card. His protege, a guy called David Ryan, where we put together strong earnings growth and a strong trend. And that has worked for me for a very long time. And that's the basis of the VectorVest methodology. So why is this so darn difficult? Now, Larry, and I've read a lot of Larry's detailed work, has gone into this in a great deal of detail. But this is just to give you a very basic idea of how your mind can play tricks. So let's say that you've got a trend-following system and it's right 5 times out of 10. Would you all agree that if you make twice as much when you're right as you lose when you're wrong, 5 times 2 is 10 and 5 times 1 is 5, so you should make 50 pence. If you bet £1 on every trade, you should make 50 pence every time you trade. Would you agree? Yes. 5 times 2 is 10, 5 times 1 is 5. Yep. So you make 5 out of 10. You've got a positive expectancy system. So that can be very profitable. But folks, the probability of a bad one is a half. Would you agree? Now this is going to really tax the mathematically challenged. What's the probability of 2 bad ones in a row? Half times a half, which is 1 over 4. Just toss a few coins and you'll find this out. A quarter. What's the probability of 3 bad ones in a row? That's it. Every 8 trades, you've got 3 bad ones in a row. That is a mathematical certainty. Every 16 trades, 4 bad ones in a row. Every 32 trades, 5 bad ones in a row. Can you put your system on without fear or hesitation after 5 bad ones? And that's 5 out of 10 is a really good trend-following system. So you get clusters. And quite honestly, it's not the clusters of bad luck that really get you, assuming you've got a reasonable position sizings. It's the clusters of good luck that get you, because I think Mark Douglas writes about this. He says that between your ears, you've got this little thing, pituitary gland. And it is responsible for all the emotions. So, sir, when you fell in, who was the guy who was making love to his wife the other afternoon in the seminar?
His girlfriend.
Was that you? Well, we had a guy who was, let's say, on the job in the seminar. And when we were at university, we had this code between all my friends, and we never made love to young ladies. We always stuck England into bat. That was the expression. Okay, so let me get over that one. So when you met that young lady of yours, the pituitary gland was sending out all this emotion, and you remember that night you were floating on air, sir? Yeah. Okay. When I come out of the gym after a good session, I'm no longer 66. I'm 18 and I'm back in the Royal Marines, and I'll nail anybody in sight. Okay? So after one good trade, two good trades, three good trades, you change, folks. You completely change. And you say, sod all that position sizing bollocks. Let's accelerate the process of wealth accumulation. So you trade bigger and bigger and bigger and bigger. My son is a classic at it. Okay? And that's why he always needs to borrow money. If I could find a leading indicator better than WhatsApp messages from my son as a leading indicator of him wanting to borrow money, there's nothing like that in the stock market, okay? As soon as the WhatsApp messages come, how are you? You know that there's a request for lit on the way. Let's say you can get to 2/3. I think you can get there, folks. You need a bit of discipline to stand aside and to wait for everything to set up. And I think that my system of the Wyckoff system with simple springs and upthrusts that I'm going to speak about later will get you there. But you don't trade the way Dr. Brooks traded this morning. You'd be waiting for half a dozen good trades a week, not 20 a day. I think you can get to that 66 out of 100, but there, 4 good trades, you've got every 81, you've got 4 good trades. So as you go that way and you sit and wait, the emotional hurdles go down. So if you can sit in your hands and wait, then it becomes much, much easier to execute because the clusters of bad luck go away. And if you can get to 8 out of 10 right, and sometimes you'll get a period where you'll find the clusters go away immediately. So these clusters are real, okay? Now, there's a great temptation to say that these things happen to everybody else, they don't happen to me. But I assure you they do, okay? And this is one account. Now, I don't know if Tom is here, but when Tom came down, when you came down to see me at Nedbank, you remember that time?
That time when I wasn't allowed to go out after dark?
That's correct. That's correct. And he did, yes. And he also, the airline lost his suitcase. So he was in the seminar in a pair of Bermuda shorts and a T-shirt. Everybody else was suited up. And Big Tom was in the corner in his Bermudas. Tom, that guy that sat beside you that day, you won't remember. He's called Mo. This is his account. He's got $1 billion under management at Greenlight Capital in Connecticut. And that's his account. And you can see the clusters of good luck and the clusters of bad luck coming in there. He was up 42% in 2019, a very good man. He's the guy, his company, my son worked for before he started his own company. And 5 losers in a row after 32. The fear of, this is Mark Douglas's fears, folks. Fear of being wrong, the fear of losing money, the fear of missing out, the fear of leaving money on the table. And those 2 fears, 1 and 2, and certainly for men above 50, and there's a few of us here that are above 50, the fear of being wrong and the fear of losing money is much, much worse than death itself. Okay, we're going to die anyway. So, but the whole concept of being wrong or losing money, this is slightly cynical, but I want you to think about this. What is your true motivation for being in the market? Are you in the market to make money, or are you in the market to solve a puzzle? I'm going to leave that with you to think about.
To make money, there's nothing to think about it. What's there to think about?
A lot of people are in the market to solve a puzzle. They think they're in the market to make money, but they're really not. They're trying to solve a puzzle. Just think about that, okay? So those two big fears are real. I've got over those myself because, one, I firmly believe that anything can happen. If you're right 80% of the time, you're wrong 20% of the time. On the next trade, you don't, whether it's one of the 80 or one of the 20. That is a reality of the situation. My money management is good, and that comes from being smacked quite a few times. I've still got a problem with missing out. Anybody got a problem with missing out? Yeah. Still, after all these years, maybe another 40 years, I'll get that right. And then leaving money on the table. Now, I coached a group of farmers in South Africa. These are not Farmer Brown type farmers with a wee red tractor. These are guys, the poor ones drive Cessnas, okay? The really rich ones have Learjets, and they're all pulling diamonds illegally out of the Orange River. And they take them to Antwerp in the upholstery of the Learjet. Seriously rich dudes. I had one guy who was up 10 million South African rands, £1 million, £500,000 now, on a white maize contract. And he gave it all back, every last bit of it back, because he thought the market was going to move further, okay? So, and if you haven't read Trading in the Zone, I think you should read Trading in the Zone. It's just a pity the author is no longer with us. So our journey, folks, is to be able to execute without fear or hesitation. And I'm going to address my best shot in fear at the moment: running away quick, letting winners run, and pushing winners. Let me take you back to 1992. 1992, I sold a mining tools company to Smith of Texas. And for the first time in my life, I was really, really, really wealthy. Couldn't believe it. The company was worth bugger all. But I designed a mining tool, and every oil well that's drilled in the world is drilled with my drill bit, believe it or not. Every last one. And it was something that I took with me out of De Beers, and I developed it on my own. But I didn't have the cash to commercialize it. So I sold it, but did really, really well out of it. I was in London at the time, and I managed to get a copy of this little book. I bought it at Waterstones. It's called The Little Money Bible, by a guy called Stuart Wilde. This is a guy, long since dead. And Stuart ran the Las Vegas MBA. And the theory was that if you could go to Vegas and win and take money off the casinos, that making money in business would be a piece of cake. So I didn't have anything better to do. I went to Vegas for a month to learn how to play blackjack and roulette and craps. Craps, my favorite game. Now, I've never gambled, and I come from a Scottish Presbyterian family where gambling was looked upon as the work of the devil. And by the way, they're largely correct in that, I think. But I had a friend of mine who was a psychologist, not a trading psychologist, and he said that I would actually benefit from learning how to gamble to become more aggressive in my trading. Okay, so I thought it was a good idea. So I went off with Stuart to learn how to play roulette mostly. And we sat there for the first day, and let's assume that you're just playing red and black. And you're playing a $10 bet on red or black. And you bet $10 and you make $10, and you've got 7 winning trades in a row, you make a miserable $70, right? Da, 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 da. Now, one of the methodologies that's proposed by the casinos and the casino books is that what's called the martingale betting system. And this was a system that my grandfather on my mother's side used for the horses. He would go to the track and he would bet a $5 on the second favorite. In the very likely event of the second favorite not winning, he would bet a $10 on the second favorite on the second race. In the very likely event of the second favorite not winning, he would bet 20 quid on the second favorite on the third race. So he would average down his trades. And frequently he came ahead, did well at that, and he had a bit of fun. And believe it or not, the bookies have in fact stopped that second favorite bet, because it is a good bet. So, unfortunately, with the martingale system, if it goes against you, you double up, and by the time you get a winner, you've got to bet $1,280 to get your $10 back. Not good. So here's what Stuart Wilde proposed, and this is when I first was alerted to the power of adding to winning trades. This is where it all came from. He proposed in our course, which lasted nearly a month, a Nanty martingale system, which I still use on the roulette wheels to this day, where if we have a winning trade, wrong way, David. So, did I get this right now? If there is we lose and we just keep betting. So with a reverse martingale, if we have 7 losers in a row, and then we get 1 win, we lose a miserable $60. But if we add when we've got a winner, we in fact make $1,270. And when we lose, we go back to the basic bet again. So this still works. So if you go to the casino some night and you play red and black, okay, there's a little white ball, which is the spread. Same thing. You'll get a wheel that is not trending, where you get a red, a black, a red, a black, a red, a black. And if you get a wheel like that, well, you don't lose much money. If you get 3 or 4 in a row, you lose 3 times, 4 times your bet. But the trick is that when you get a red and you win, you double up. And you'll find that the wheel trends just like a market. Now, there's a little scoreboard. The next time you're in a casino, go down to the end of the table and have a look at the scoreboard. The electronic scoreboard. And you'll see long runs of red, long runs of black. So when I see a red, I double up. And I probably double up for the 3rd time. Da, da, da. Make good money. And then as soon as you get black, you lose 1, you go back to the basic bet again. Da, 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 da. That works. Exactly the same way as a market. So from that, from that month in Vegas, I first decided, way back in 1992, that the way to really accelerate profits was to add to winners. Tom, I have a guy in South Africa who's tried this, and he actually plays it the same way as you would play roulette. In other words, if he takes a trade, he scalps it. He gets in, he makes 10 points. That's a win. He takes the money, and then the next time he gets in again, he goes in at double the size. Takes the money quick. Gets in again, treble the size. So he doesn't let the position run and add to it. He takes his money along the way for what it's worth. And many people would say there's extra costs in that, and there certainly is. So that's where this whole concept of adding to winners came from. It was that month in Vegas many, many years ago. And that system still works to this day. And I've gone through this very quickly, but I'm going to give these notes to Tom, and Tom will send them all out to you. You can actually work through that on your own. And he'll also send you out the roulette course. And Larry, I've decided to go up £1,000 more than you. It's $36,000 for my roulette course, okay? Yeah, you want $35,000 for your course, so I'll put another $1,000 on mine for the roulette course, okay? So Tom will send the stuff out on Monday, okay? It's great fun, and when you go to that roulette table and you win and you double up, everybody at the table will be looking at you as if you've got two heads. Okay, who's this friggin' idiot? And then you double again, and then everybody will be just freaking out, because you're not supposed to do that. You're supposed to go the other way, double down. Great fun indeed. And I've been chucked out of a casino on the Edgware Road for taking too much money off them. Chucked out. There is one wheel in the casino on Edgware Road that trends a lot. So if you go to Vegas, just wander around, look at the scoreboard and see which wheels are trending, because they get worn a little bit, and some of them trend. And what I mean by trend, I mean a long row of reds, a long row of blacks in a row. That's the one to go for. You can't lose money when you're wrong. So that's 2 gambling tips. I told the people who came on Friday that my son plays poker at 6 o'clock on a Sunday morning. That's midnight, 1 o'clock in the US, and he takes money off drunk Americans. He says it's incredibly easy, okay? A piece of cake. You can go through that in a great deal of detail. And that's where this all came from. So I've answered this question, folks. Can discipline be built, or has one person got it and another person hasn't got it? And I believe it can be built, and can be built relatively easily. Now, I build discipline very easily indeed. And many of you will think that that's a good thing, but it's just as easy to build a bad habit as it is to build a good habit. Really? Yeah, very easy if you let yourself slip. So I never have the chips with the meal. Not because I don't like chips, and because chips once in a while won't do me any harm, but I'm scared, because I know myself well, that if I have chips once or twice in a row, I could build a habit to have them every day, and I don't need that. So I'm very, very careful, and it's that little V thing that Steve talked about yesterday. What little thing can you do today so that you can move towards the person that you want to be? So you really have to be very careful about those small things. My humble opinion, I'm no psychologist. I frequently have to refer to the world's greatest trading psychologist. And Steve, if you're here, unfortunately, it's not you. It's a little doctor who practices out of Tennessee, Dr. Jack Daniels. Okay. Has anybody consulted with, in fact, do you remember the Al Pacino and The Scent of a Woman? He says, I know him so well, I call him John. Oh, that's such a good line, that, yeah. We have a Vectorvest customer up in Arbroath, north of Scotland, north of Edinburgh, a cold place. She says that there's a great trading psychologist, Andrew, up in Edinburgh, up in Glasgow, Dr. Johnny Walker. Okay, works wonders, she tells me. So I'm no trading psychologist, but the paradox is that when you've got discipline, you don't need it. And I assure you that I don't need any discipline to go to the gym. None whatsoever. In fact, I need to exercise a great deal of discipline not to go. And Tom will tell you, every morning in the Which Way Today room, about 10:30, I would get twitchy because it's time to go to the gym. Simple as that. Larry, I did early on one of Van Thorpe's courses a lifetime ago, and I got to know him quite well. And we had to fill in this, just at the early days of the internet, we had to fill in why we got in, the normal trade log and whatever, and he gave me a bollocking online. It was a Skype meeting remember when Skype was new? You could chat on Skype, it was such a novelty. And he gave me a bollocking in front of everybody. He said, David, getting out of a position because you want to go to the gym is not a valid reason, okay? So he passed away the other day, old Van Thorpe. When you got discipline, you don't need it. And you'll find, and where's Belinda? Belinda, you'll find that if you go through that exercise that I'm going to talk about, and I've cribbed it from Mark Douglas, I don't care where it comes from as long as it works. You'll find that you'll build that discipline, okay, to get over any hurdle. And we've all got the same hurdles to go over, and it is a rite of passage. So out of all of this, folks, all of this, and my word, you've got a bit of work to do because there's been an awful lot of stuff presented here, and first-class stuff, not, as they would say in Afrikaans, not by groot bullshitters, but by people who have traded an awful lot. Stuff that works. That guy on the internet that sits in front of that car and he's skiing and he's playing polo with Harry and Willie, that guy, that's my fastest move of the day. When I see him coming up on YouTube, I sprint across the floor to try and switch it off YouTube, you know. So the industry's populated, unfortunately, with scoundrels. So I think I put that in twice. So I used to do this as a business, believe it or not. And there was a brokerage, a big brokerage that used to say, David, we got this chap from Saudi, and he spends, he gives us $200,000 a month commission, and he's losing money hand over fist. We can't afford to lose a comb. Can you go and sort him out? So I would sit there for 2 or 3 days going through the trading discipline exercise. I don't do it anymore. I just couldn't be bothered, to tell you the truth. And I had a fight with the last one that I did it with. But it was a very profitable time. It taught me an awful lot. So here's what Mark suggested. You need to decide on a system out of all of this that suits you. And my challenge to you folks is to resolve to follow that system for a batch of trades without changing the rules. Who's been through that exercise already? Okay, well, that's wonderful. Tom has, I know, many times. Hania has. Quite a few of us have. Well, the rest of us, and ladies and gentlemen, that is a rite of passage. Otherwise, you're going to be coming on courses for the rest of your days. You're going to be buying books for the rest of your days. You're going to be having a double Johnny Walker at night, and you're going to see some bloke who sells you the long-lost secrets of W.D. Gann. There's a guy in Australia who charges 25,000. I can't remember whether it's American dollars or Australian dollars for the long-lost secrets of W.D. Gann. Okay? And it's so easy to fall for that stuff after you've had a cluster of bad trades, especially if you've got a little bit of lubrication at work. Easy. So you've got a bit of work to do, folks. It's an exercise that I do myself at least 2 or 3 times a year, because the discipline slips. Will you humor me and do that? Okay? Don't make it complicated. The last time I was here, I put on a very simple mechanical system that's trivial, and I'm sure Tom will send you that. If you need something that's mechanical, it's just couldn't be simpler. It's called a tipping point, and it's just a few lines of code that you can write. But I'm going to suggest something later on in the afternoon that you can do. And, building discipline, it's, the old personal trainer. Has anybody got a personal trainer here? I had for a long time, and I did again after the pandemic. Personal trainers would like to think themselves that they're in the exercise business, but they're not. They're not bright enough to work it out. That they're in the discipline building business. Because invariably, unless you're playing for Manchester United, you hire a personal trainer because you make a commitment. That makes a commitment to get there because you're paying her $100 or £100 an hour. So you want to be there. She'll tell you that she's got a set of exercises that are ideal for your body type, but you can see them writing the exercises out in the car park, So they're making them up as they go along, and it doesn't matter. Okay? They're in the discipline building business, as the same as I was when I was trying to get people back on the straight and narrow. So, if you want to do this, folks, quite honestly, you can start to do it in a demo account if you want, or start to do it with a real account, but just trade very low in size. Trade it at £1 a point until you get the hang of it. And just write it off as a training exercise. Now, something very special happens when you do this. Somewhere between 10 and 15 trades, all the internal resistance goes away. I've seen this so many times with myself and with dozens of people that I've done this with. You're going to find that you have resistance and then it just goes away. And I don't understand why. There's this whole concept of neuroplasticity that everybody can talk about, but nobody really understands. Electrons firing together in your head, neurons buzzing and making connections. So you're going to find that somewhere between 10 and 15 trades, the resistance goes away. As I say, I build discipline very easily. So I found myself that after 8 to 13 trades, all the resistance went away. So that's your task out of this. Quite honestly, all of the technical analysis is largely irrelevant compared to this. Okay. And the more you resist that, the more difficult you're going to find this business is going to be for you.
Can I have a question?
Of course.
The purpose of this is that you make 10 to 15 trades.
30 trades.
13 trades.
30, 30.
30. And then what's supposed to happen?
You're going to find your resistance to following a simple set of rules melts away. just melts away. Now, maybe you haven't got resistance to following a simple set of rules. That would make you very special. That would make you very special indeed. Most people have.
Especially in the different ways. I am. I'm special in the different ways. It's not this.
Okay. You pick whatever methodology you want. Makes no difference to the exercise. Anyway, it's worked for everybody that I've put them through it, that have been honest enough to do it, it's worked for them. Now let's tackle fear, folks. The condition of fear, the first trading fear, is divorce from any true and immediate danger. Would you agree? And it is my opinion that you can always cope with the present moment, but it's very difficult to cope with the future. Now, I was taught this in the Corps, in the Royal Marines, that when some other sword's firing at you, or you're going into a conflict situation, that the key to managing that is to keep your mind incredibly present, not focused on the past, not focused on the future, but totally focused on what you're doing now. And I assure you that when some other sword is shooting at you, that you get there quite quickly. As that thing wings over your head. Sorry, guys, you're making a noise there. Okay. And it is my humble opinion that it's impossible to feel fear in the present moment. And that's why on Friday I asked you to complete that exercise at dinner, where you do your best to go through dinner focused on what was happening then. Did anybody try that? How did you find that? Anyone? Pardon, sir? It didn't work. It's difficult. Yeah, it's difficult.
I was fine. She wasn't.
Okay.
She wanted to know everything.
All right. Well, I think that if she directed the conversation that way and you addressed that, then you were present. Okay? You were okay. I think one of the challenges that I think about myself a lot, and I'm lucky enough to live in a lovely part of London. It's a picture-perfect square called Pembridge Square. And Kensington Gardens is just on my doorstep. And I do my best to try and walk in Kensington Gardens and to be totally there. And you'll find that your mind comes to distractions very frequently indeed. It takes quite a bit of practice to stay in the moment, to be totally there. You can get better at it. I'm going to suggest 3 ways that you can get better at it. And I know you all want to get into charts and whatever, but I think you've had a lot of charts by now. I'm going to go into charts in a moment to keep you happy. It is my opinion and observation over many years that all winning traders are very present people. They're focused on what's happening now in relation to their trading rules. And I've found that building presence into your trading is essential to get that 30 trade exercise sorted out. And Tom talked about this on Friday, I think, where he made you work through the exercise of being on a motorbike and turning the throttle. At 50 miles an hour, you're watching everything that's going on. At 70 miles an hour, well, you're reasonably focused. And when the little pointer, or whatever they have these days, goes up through 100 miles an hour, you're not thinking about what you're going to have for dinner. You're totally and utterly there. 100.
It's not so much.
No, well, take it to 150 then. Okay. They're all different. Okay. But there is some point where you'll be focused totally there. Okay. And that's where you want to do your trading. Have you all been to that point? Have you all turned the throttle?
Yes.
And that's where you want to be. And when you're there, time doesn't exist. So if you're at your desk trading, and you're trading on the time frame that Dr. Brooks spoke about, and you're watching the clock at the same time while you're not present, and you're going to find it in your best trading sessions from the open right through, opens 2:30, right through to 4 o'clock, 4:15, time just disappears. Does that happen to anybody? Or time just completely disappears? That's a really good sign that you're there. Time does not exist in the present moment. Just flashes past. I remember once upon a time, I flew from Heathrow to New York City, and beside me was the fashion editor of Vogue magazine. She was lovely. It was my shortest ever trip to New York. I think, in hindsight, it was probably her longest. So, time just sort of contracted. I was totally and utterly there. My word. In the trading rooms in the city. Who trades in the city here? If you trade in the city, a young lady is known, excuse this chauvinistic moment, ladies, as a belter. Okay, she was a belter of note. There are degrees of belters. A bit of a belter is even more of a belter than a belter. Okay, a bit of a belter, okay. Chauvin, please excuse me that one. Similarly, I asked some bloke at the gym I go to ages ago. He's just come back from a trip to the hard bit of Everest. And I said to him, why do you climb mountains? And he gave me the old stick just because it's there. But I assure you that the reason that people really climb mountains is that when they're up there on the side of that darn mountain, they're not thinking about whether they're going to have the chicken or fish that night. They're totally and utterly there. Special force soldiers that have seen battle very rarely settle in, because in the heat of the battle, they can be in the present moment for many hours and days at a time, and they struggle to go back to normal, and they become quite difficult to manage and normally end up blowing their brains out. So, intense presence is required when a certain situation triggers a reaction with a strong emotional charge. And we've all got people, I think you would agree, that cause you to get really upset. And believe it or not, those political, mean-minded SOBs are doing you a favor. Now, the first method of building presence, and you can get really good at this, is by becoming totally present when your self-esteem is not being threatened. And I assure you that little bar bouncing up and down can threaten your self-esteem or going against you. So when you're walking in the park, when you're at dinner, do your best to be completely there. And very quickly, your threshold of presence will grow. Nature's good. Holidays are good. When you've got that, and you're watching Niagara Falls, you're watching Victoria Falls, you're watching a polar bear, Steve's polar bear, meander around somewhere or other in the Antarctic. That can keep you totally grounded in the moment. You can go through these at your leisure, folks. Focus on what's happening now and tell me what problems you've got. There's a really good book that I think is worth a read. It's a long read. It's called A Course in Miracles. And in that it says, I'm only affected by my thoughts. Now, Steve spoke about this on Friday. And this is what the more spiritual people such as Eckhart Tolle have been talking for a long time. It's called cultivating the silent watcher, to become a silent watcher of your thoughts. Don't judge those thoughts, and you'll find that the same thoughts, especially trading-related thoughts, will come over and over and over again. So don't judge them, but do your best to laugh at them and dismiss them. So get yourself to a point where you're watching your own thoughts, and you'll find that the thoughts will come and they will act like a room full of naughty children. And the same thoughts rattle on in there for many years. Don't believe everything you think. And the final method of building presence is to try and get the reptile brain and the more conscious brain in sync. And invariably, there's a half a second lapse between the two. And in fact, I was speaking to a young man on Friday who'd just done a course on that from the same chap in Cape Town that I quoted on Friday. Something will happen. For example, on your desk, there's a pen. Have you ever knocked a pen off your desk and you've caught it and you can't believe how quick you are? Has that ever happened to you? And that's because the reptile brain has reacted to this pen falling half a second before your conscious mind got that thought through to you. That's what's happened. Similarly, when somebody chucks a ball at you fast, you duck. Chucks a ball at you slowly, you catch it. Ball coming slowly gives the conscious mind and the reptile mind time to actually work together. So I think your mother always told you that before you're going to hit somebody, take 3 deep breaths. Did your mother tell you that, sir? You're just about to deck somebody. Take 3 deep breaths. Well, I think that 11 deep breaths is what the old Buddha spoke about. To try and put yourself, and the real reasons to keep the reptile mind and the more conscious minds in sync. There's a half a second lapse between the two in a danger situation. And that half a second is responsible for many of the emotional errors that you make. Where you resolve that you're going to let this run. And all of a sudden you take your 2 ticks profit. And then you swear to yourself that you're never going to do that again. And the next day you do the same damn thing over again. That's that half second difference between this fella, whose job is to keep you alive when a tiger is about to nail you, and this one that processes information much more consciously. Big part of emotional overreactions, quick reactions, is caused by that half second. And the more present you are, the easier it's going to become to overcome those actions that occur in a part of your brain that you know bugger all about. That was designed to keep you alive when the old saber-toothed tiger was hunting you down. End of day traders. End of day traders. So if you're sitting at your computer in the evening and you've got some decisions to make, then get yourself into the zone by taking 11 deep breaths. I think of all of the methods of building presence, cultivating the silent watcher is the most important. Now, I quoted a book on Friday. It was called Practicing the Power of Now. Kathy here spent 6 weeks, I believe, studying the book. I did an awful lot of mentoring at institutions, and they used to look at me funny when I actually handed out a copy of Practicing the Power of Now at an institutional trading seminar. And all traders live in the present moment. All big winners live in the present moment. Golfers live in the present. All good golfers live in the present moment. All good tennis players live in the present moment. In fact, there's a book called The Inner Game of Tennis golf by Tim Galloway? If you Tipp-Ex out golf and write in trading, it really works. There is a golf coach. What's the name of the golf coach? He's written a book on peak performance in golf, and he was Tiger's coach. He was Ernie Els' coach. Pardon? No, another, not that guy. Pardon? Can't remember his name. I've got his book sitting in Notting Hill, in fact. If you Tipp-Ex out, for those of you that are under 50, Tipp-Ex is a little white stuff you put on the paper. If you Tipp-Ex out golf and you write in trading, his books are really, really great. Manchester United have got 2 coaches. One a new age fella and one university-trained chappie, and their job is to keep people in the present moment, especially when they're kicking penalties. You imagine you're taking England against South Africa, and it's injury time, and you're sitting there trying to take a three-pointer. Presence required to do that. Wayne Rooney said so beautifully, they're never a formality, okay? When, I don't know, who's at the top of the Formula One at the moment? Okay, well, they are all coached to be in the moment when they're in their little red car, whatever color the car is. To stay there. All winners in every endeavor, folks, live in the moment. Now, I think it was Belinda asked, or somebody asked Tom yesterday what his goals were. I don't know who that was, but it is my view, folks, that we all should have some goals, yeah? And then forget about them. Maybe break them down into steps and to do our best to be fully in the moment and put everything into that one particular step. Review your goals once a week, but if you get to a point where you're continually chasing that goal, you lose this moment. So, by all means, have goals, by all means. And I think we all should have. But don't allow this moment to become a stepping stone to a future moment. So, I don't know what your goals are, but certainly break them down. To have a daily list of what you're going to do. Prioritize that daily list, and then do your best that when you're completing your list to be completely and utterly there. When you're writing that report, when you're completing this trade. So I'm not knocking goal setting at all, but I'm saying that many people chase goals and they never get there. The reason they never get there is that they're actually always chasing and not putting a great... the only place where there is creativity is in the present moment. So don't allow this moment to become a stepping stone to a future moment. But I'll leave that with you. And let Eckhart Tolle talk you through all of that. In trading as in life, don't be concerned with the fruit of your actions. Give attention to the action itself. The fruit will come of its own accord. And I've got ahead of myself. Don't allow this moment to become a stepping stone to a future moment. And our job is to execute perfect trades over and over and over again. I think I've hammered that to death now. And you can read these bits and pieces for yourself. Surrender to the market itself. To surrender is to accept the present moment without reservation or inner conflict. You see this at airports. British Airways says, flight's delayed for 2 hours. An old fella goes completely mad, you know. It's not going to help. He's going to get a heart attack. British Airways don't care. To be able to surrender to the markets is quite something. Non-surrender hardens the shell of the ego. The market is perceived as threatening. The market is now your enemy, and it's quite common to hear traders swear at the screen. When you have an expectation, I was speaking to Belinda about this earlier. When you start, who's brand new here? Is any people are brand new or consider themselves brand new? A few of us, not many of us, a few of us. Well, you've got a huge advantage, sir, because as you're new, you probably don't know anything. When you don't know anything, you've got no expectation to be able to work out whether the market's going to go up or down. And you'll find that you make a heap of money. 6 months into the journey, you're now a guru. You've been on courses, you've read books, and slowly but surely that expectation comes that you know what's going to happen next. And as soon as you've got an expectation in anything and that expectation doesn't work out, you actually get a dose of pain from the universe. And it sits there like about 3 pints of Guinness at lunchtime. Okay. Causes an awful lot of pain. That pain grows and grows and grows and makes trading quite difficult indeed. So one of the ground rules of this is to try and get yourself to a point where you've got no judgment, no resistance, no negativity. And as Mark Douglas says in his book, get yourself to a point where you have 2 levels of belief. At the level of one trade, anything can happen. Anything. It only takes one idiot somewhere in the world to totally stuff your position. Remember vividly, Tom and I were trading online a lifetime ago. Again, when Skype was new, and we were talking online, and I went into an oil position, and within a few minutes, well, half an hour, I was up £5,000 in that position. It was good money. This is nearly 20 years ago. I was feeling so flush. I went out to the kitchen and I brewed up a big pot of tea, Earl Grey. And I threw all those Presbyterian principles away. I put in an extra tea bag. All right? I was feeling really flush. I came back. My £5,000 was gone, and my £1,500 stop loss was gone. I hadn't brought the stop loss up. Some idiot had blown up a pipeline in Nigeria. Until you can predict an idiot who's about to blow up a pipeline, you don't know what's going to happen next, folks. You really don't. So to have an expectation that you know what's going to happen next in this environment where the lead is in the sky, as the Dubliners once said in a popular drinking song, is just crazy. Nobody knows what's going to happen next. If you're right 80% of the time, you're wrong 20% of the time. On the next trade, you don't know whether it's one of the 80 or one of the 20. That's the reality of the situation. So if you think you know what's going to happen next and it doesn't happen, the Guinness is on the way. And that pain grows and grows and grows, and it's got some terrible consequences, that pain. So, and this is the one thing that helped my trading when I first read Trading, The Disciplined Trader, was that traders need 2 levels of belief, folks. At the level of one trade, you have to firmly believe that anything can happen. But at the level of 30 trades, you have to firmly believe with every core of your being that your edge will work out. And that's difficult. All of us understand thinking and probabilities at an intellectual level. We were all taught stats at school. But to understand probabilities at a stomach level is quite something. And certainly that month gambling in Vegas helped me immensely at that. And I suggest, and I used to do with all my coaching clients, that we learn how to play backgammon. Because if you learn to play backgammon with the dice, okay, you learn to think in probabilities very quickly. I know we've got one backgammon player here. Yep, there he is. Maybe we've got two. So one of the things that I could recommend heartily to get yourself to a point where you can think in probabilities is go to your local store or buy it online, a simple, cheap backgammon set. Learn how to play backgammon. Do not get tuition from a Greek fella, because he will rob you blind. Those Greeks are taught how to play backgammon. Any Greek folk here? At their mother's knee. And if he brings out that doubling cube, you run for cover, okay? Because that's how the bet rises geometrically. So, but learning how to play backgammon is a very simple way to get your mind into thinking in probabilities, thinking in a batch of trades as opposed to one trade. And backgammon's good. If you ever get a casino that plays craps, craps is a great game as well to get you to a point where you can think in probabilities. And I love the craps game. It's my favorite game at the casinos. There's only a few tables in London. Again, the table trends, and if you bet that it's going to keep going, you can take money off the table. You've got to be bigger when you're right than you are when you're wrong. And I don't think it's possible to beat markets without doing that. I'm going to talk about that in a second. So, and here's my metaphor for this, folks. And this is something I would like you to think about. I think that in trading, we're walking along in a dark night, surrounded by a thick fog. We have no idea what's going to happen next. None. Not in this environment, not in any environment. You've got a torch. And that torch illuminates a narrow path in front of you. The fog is your life and the ups and downs of the market. The torch beam is your conscious presence. And the focused, clear place ahead is the present moment. That's my metaphor for what I've just been talking about. And if you find your trading unsatisfactory, it's only by surrender where you can take positive action to change. And you certainly won't work out what's going to happen next. Let's go back to the Guinness. Let's say that you have an expectation that this trade's going to work out, and it doesn't work out. The Guinness arrives. It sits in your stomach here. Creates a great deal of pain. That happens again. More pain arrives. You've now got your setup comes again, and your job is to execute that setup without fear or hesitation. But our minds have got two characteristics. They associate one moment with a previous moment, and they want to avoid pain. The setup comes again, sir, and at a level that you know nothing about, your mind sees the last two, and it says, this caused me pain. And at a level you know nothing about, you'll subtly hesitate. Has anybody ever hesitated to take a trade here? That's the reason why. And the way to get over that is to stop the pain. And the only way to stop the pain is to believe with every fiber of your body that at the level of one trade, anything can happen. So if you have pain, it's because you haven't fully accepted that fact. And Mark Douglas's exercise of 30 trades will do its best to get rid of that pain for you. So that's the process that I think you should work through. Nobody does it. I do courses for VectorVest. There's 100 people in the course. I say to them all, every last one of them, I want you now, first of all, to write out a trading plan for me and send it to me, and I'll critique it for you. Out of the 100, you get 5 people who send it back. And out of the 5, you get 3 people that do the 30 trades. It's difficult, and I can see in your faces that these clusters that old fellow is talking about, in fact, don't apply to me. So this is an exercise that has to be done, in my humble opinion. It is a rite of passage. Tom has done it and done it 100 times. Belinda, that's your next step, girl. I'll work with you all the way, okay? More than happy to help. If anything. And old Nassim Taleb, the guy who's written Fooled by Randomness, Nicky Taleb. You met him, Larry? Yeah, he's a nice guy. Nice guy, I know him well. We brought him to Johannesburg, to the TASA, Technical Analysis Society of South Africa, years back. First-class fellow. He says that a Stoic is a Buddhist with attitude. So, and if you like to read like me, there's a book written 2,000 years ago by a Roman emperor, all in Stoicism. Very useful read, Marcus Aurelius. Anybody read it? First class stuff, isn't it? I read too much, probably. So, Tom, do we need to break, or do you want to go right through?
Yeah, I think maybe a 10-minute break. Yes.
Yeah, okay. And then I promise you guys, we'll move into charts where you'll all be much happier, all right? You'll all be... Yes, of course you can. What was that question again?
If you are that good, then why are you still standing here?
Okay. I'm just answering the question because everybody's thinking it, you know. He's selling VectorVest, and he does the odd seminar. This is the first seminar I've done since the last seminar that Tom and I did together. But I think that the answer to that is that when I'm up speaking, I'm never more present. I'm actually more present when I'm actually speaking to a group of motivated people like yourselves than I am when I'm trading. And the time just flies. Now, those of you that don't think that I could talk for 3 days don't know me that well. Okay, so I can talk about this and time just disappears and I just fall through that little crack in the floor and time completely disappears. And that's the reason why I still do these. Okay, I never feel more present, more grounded, more there than when I'm talking to an audience of motivated people. That's why I still do them. Otherwise, I wouldn't be bothered.
Great answer.
Okay. So.